Hey, how's it going, everybody? Welcome back to the channel. Yeah, dedicated to financial literacy. That's the name of the channel. Continue to hit the subscribe button, all right? And also, give me a thumbs up if you like. If you like the video, be sure to tell me about it. And then in the notification bell, and that will notify you when I have more content coming on the channel. Okay. Again, like I want to tell everybody, I started this channel basically for my friends and church family and family members. People were asking me about the stock market, and during the pandemic, we couldn't really get together. So I said, you know what? Why don't I do a couple of videos on YouTube, and you guys can just check them out in your own leisure. And that's kind of how it started. And now, with 30 some videos later, I'm still doing them. And so, not trying to make any money on YouTube or anything like that. That's not my goal at all. Whoever wants to learn, whoever wants to check it out, you can. And this channel is geared towards people that are new to investing. And you're just trying to find out about the stock market, whether it be trading or investing. Um, this video today, and I'm going to do a few of these. I want us to do a little series, I would say, on technical analyzing. Now, technical analyzing is basically it's the study of historic price movement in order to make an accurate or semi-accurate decision on where the market is going. So I'm going to say that again. It's the study of historic price movement, historic history in the past. By looking at charts, you can look at the past and make an educated guess or accurate decision on what the market is going to do in the future. Well, that's very important. If you can look at history and get a pretty good guess on what's going to happen in the future, then you can anticipate, right? You can anticipate and say, okay, I believe this stock, this company is going to do this based on what it's done in the past. And these trends that it's made in the past tells me that there's a good chance, it's a very good chance that it's going to go up or it's going to go down. Well, if you can anticipate like that, then you can have a really successful trading career, right? So that's kind of what we're going to talk about. We're going to talk about technical analyzing. Now, I mostly fundamental analyzing is what I do, which is basically the study of the company, the business. It goes more into the accounting of the business, cash flow, profits, what they call PE, um, EPS. And these are all things that I've spoken about in previous videos. So you can just go back. Um, I look at the leadership of the company, um, the executive team, what kind of people are they, and have they been successful in the past? That's all fundamentals where you're studying the company itself. And by looking at where this company is and where it's going and the success that it's having. And another thing is, do they have a competitive edge in the market? Do they have a competitive edge? One company I'll give you that has a competitive edge, that's Amazon. What other company you can think about that does what Amazon does? So they have what's called a moat. They have a competitive edge. That's fundamentals. This channel or this video is talking about technical analyzing. And mostly technical analyzing is used, that tool is being used mostly by day traders. Not just day traders, but particularly day traders rely a lot on technical analyzing. Now, I have a little board up here, and so I've got some drawings, and we're just going to go over a few. One of the things that I want to do is really try to keep the videos to a minimum and not too long, okay? And so today, what we're going to talk about is there are three types of charts. There's more, but the basic three charts is the bar chart, the candlestick chart, and the line chart. Now, candlestick takes a little bit more time to explain. It's a little bit more difficult. So I'm going to save that for another video. And we're just going to work with the line chart. It's just a singular line, okay? And um, we're going to start, and we're going to assume that this is Microsoft. The ticker symbol for Microsoft is MSFT, Microsoft, okay? Now, if you look at this chart, what in your mind, what would you say? If you had to guess, is this chart heading up or heading down? Is the stock heading up or down? You're 100% right. This is up. And that is what's called an uptrend. So for you newbies out there, new investors, if you hear someone say, if you hear somebody say it's trending up, or it's an uptrend or a downtrend, well, what is a trend? When I was a kid, Levi's jeans were like very popular. Okay, very popular at one point, and everybody was buying them. They were trending because everybody, I mean, all the kids my age wanted a pair of Levi's. And then it was Converse, the canvas Converse shoes. Back then, the Converse were about 11 bucks. They were about $11 in the late 70s, early mid 70s, late 70s. They were like 11 to 13 bucks, at the most $15, okay, for a pair of Converse. And so they were trending. So a trend is when you get a group of people moving in the same direction. People are going in the same direction. The majority of people are going in a certain direction. That's a trend, whether it be up or down. Well, what on this display here, what I want to show you is an uptrend. And there's some things that I want to talk to you about concerning the trend. And so let's take a look at it, okay, real quick. And I'm just going to go over a few things with you. Where's my marker? Because I may need to write on here too. Now, the first thing that I want you to know, whenever you're going to hear a term called higher high and lower high. Whenever you hear about an uptrend where the market or the stock is going up, you're going to hear higher high. And here's the higher high right here. You see that? That's a higher high. It's a higher high. Now here is another higher high. Why is this called a higher high? Because it's higher than the previous high. So the stock went up, and then what we want to call this, when the stock goes up like that, we want to call it an impulse. Impulse. And when it goes down, we call it a pullback. Pullback. Impulse, pullback. Impulse, pullback. Here's another higher high. You see that? There's another higher high. Meaning it's higher than the previous high. So whenever you hear higher high, that just means it's higher than the previous high. So here we go. Here's a high here, higher high, higher high. Now, the market is going sideways here. It's not going higher, it's not going down, or it's not going up or down. It's not trending up or down. It's going sideways, or what they call consolidation. So we'll say consolidation. Excuse me here. All right. That's consolidation. It's not going up or down. It's just going sideways. But then, here we go. Here's another higher high. Now, one of the things I haven't said is lower highs. It has a higher high, higher than the previous high, but it also has a higher low, an HL, a higher low. So you can see here that it's a higher high, higher than the previous high, but it also has a higher low. So the low is higher than the previous low. You see that? The low is higher than the previous low. Now, here's an indication on how you can see if it's really truly an uptrend, and that is this: the higher low has to be higher than the previous low. That's an indication. As long as that's happening, you are still in an uptrend. But the moment the low, this low goes below the previous low, you see that? As long as the low is higher, you're fine. We're still in an uptrend. But if this actually came down here below the previous low, there's a good chance you're looking for a reversal to a downtrend. As long as this low is above the previous low, this low is above the previous low, this low is above the previous low. As long as that's happening, you're in an uptrend for the most part. Now, I'm not saying that it couldn't shoot down and go past and break past that previous low, but I'm just trying to give you as far as an uptrend, a true uptrend. You got higher highs. Look at these higher highs. That's what higher high means. It's higher than the previous high, and then you have higher lows. Higher lows. The lows are higher than the previous low. This low is higher than the previous low. And as long as this, now watch this, say this came down here, all right, and it goes below the previous low, there's a good chance you're in a reversal going the other way. The market is going down. As long as as long as this higher low stays above the previous low, you're in an uptrend. Does that make sense to everybody? And it's the very opposite in a downtrend. It's the very opposite. Here is higher highs. In a downtrend, it's higher lows. It's lower highs, I should say. Lower highs and lower lows. Okay? So this is called an uptrend. This is called an uptrend. The market went up here. This is an impulse. And then we had a pullback. Impulse. Pullback. Impulse. Consolidation. Sideways market. Down. Pullback. Then we had an impulse. The market went up. Down. If it breaks past the previous low, there's a good chance that you're having a reversal. All right. Now we go back to a high. Higher highs. Remember, higher highs. Then we have a pullback. The higher low is it's higher than the previous low. As long as those two things are happening, we're in an uptrend. All right? Okay. So we'll get rid of that one. Now the very opposite with the downtrend. And I'm just going to go over this really quickly. Time is running out. I spent a lot of time on the uptrend, but it's the very opposite. So now what we're looking for in the downtrend is lower highs. See? Lower highs. Lower highs. The highs are lower than the next one. You got it? See? So what's happening is this lower high, this high right here is lower than the previous high. And then you have lower lows. See that? Lower lows. Lower lows. This confirms a downtrend. Lower highs, lower highs, and lower lows. What about a reversal? If this, let's go here, say this went up above the lower high and breaks that lower high, there's a chance that there's a reversal. The lower high begins to go up, and this is the impulse here. Remember, that's the impulse because this is the downtrend. This is the reversal. This is the pullback. Okay, so if this goes up above the previous high and exceeds that lower high, you're looking at a reversal where we could be going back to an uptrend. All right, but this is what you want to look for: lower high, lower high, lower high, lower high. The high is lower than the previous high. The high is lower than the previous high. Lower lows. All right? So I'm not going to spend too much time on that one. Now, we're going to say this is Google. Google is, the company name is Alphabet, actually. Google is Alphabet. The ticker symbol is GOOG. What I'm going to show you real quickly here is resistance and support. Support, and you can do this in your charts. You can draw lines. Support, here's the actual, you can see the chart, what it's doing. Okay? Now this, you can clearly see this is a downtrend. Lower highs, lower high, the lower high, lower high, lower high, lower, lower low, lower low, lower low, lower low, lower low. Okay, so support, what's called support, meaning it's when the chart or the stock bounces off a bottom and begins to head up. As we did here, as you notice, it comes down here, and every time it gets to this support area, this part of the chart, it bounces back up. Comes down here, bounces back up. Comes down here and bounces back up. This is a support. When you think of support, think of a floor. When you throw the ball off the floor, it bounces up. So think of support that way. Resistance is the very opposite. It's like the roof. If you throw a ball off the roof, it bounces down. If you notice, here's what it's doing. This stock, Google, every time it comes here, it bounces back. Comes to this again, this level, it bounces back, bounces back, bounces back, bounces back. And you can draw this line, and basically a resistance and support shows you a trend of what a stock is doing. So we could say, wow, every time Google gets to this line, it bounces down. Why is that important? Well, if you know it's going to bounce down here, you could sell before it goes down. And then when it goes down here to support, now you know every time it comes down here, it usually bounces up. So now this is a buying opportunity. You buy it before it hits resistance, it gets there, before it hits support, and then it bounces back up. And then, I gotta sell. It's approaching resistance. It's approaching the ceiling. I gotta sell. It's about to hit the floor. I gotta buy. Now, that doesn't always happen that way. I'm just giving you an analogy, an example, okay? So, resistance and support. I feel like I need to explain this even better. So, I'll probably spend a little bit more time on that in a video, explaining resistance and support. But this is a downtrend, but it has the lines drawn where you can draw these two lines, a support line and resistance. If at any time this line breaks resistance, that's usually mean it's establishing a new high. Or if it breaks support, it's establishing a new low. So that's why these support and resistance lines are a lot of times very important, because if they break this line, if this one goes here, it's broken the support. So guess what? This actually becomes the new resistance. It becomes the new ceiling because you've just broken the support. So the support actually becomes resistance. And now you establish a new floor. Same thing if it goes above resistance. If this line goes above resistance and the stock begins to go above resistance, this becomes support. And now you're establishing a new resistance. You see how that worked? It went past resistance, so it established a new high. Now there's a new high being established. So because it's a new high being established, now you got to make this your support line. Anyway, I'm going to leave it at that. If you have any questions, please put them in the comment section so that I can break it down even further. I hope I did. That was the basics. We're going to talk about candlesticks on the next video. Okay. Thank you and have a wonderful, wonderful day, everybody.